Hello everyone. Everyone in the room, please turn on your video so I can see your face. Hello. Daisy and Sanjita. Hello, hello, hi. Sanjita, are you there? Okay, good morning. So we have another person here. Who is that? Ku Jambo.
Yes, but
We give him maybe another 5 minutes. Okay, while waiting for him, can you please at least do some short introduction about yourself? My name is Kimberly. Okay.
my name
Hi.
is
Yuan Hao, Daisy, and Sanjita, is it?
Yes.
Pronounce her name correctly, yeah.
Yes.
Okay. So where are you from, all of you? Are you all in KL now?
No,
Kajang.
Okay. You are Kajang, yeah, Yuan Hao? Pardon?
Sebenarnya.
Semenge. So still in KL Selangor area.
Yes.
Daisy, how about you?
I'm from Bani, Lama.
Marina. Okay, I'm actually staying in Kajang. Okay, and I originally born in Kajang also.
Where?
So I actually graduated from New Era 10 years back. So you are all business finance student, right?
Yes.
So what subject have you done? You have done, so far as I know, you have done your accounting. Correct?
Yeah. But yes.
You have done your accounting during your first year.
The business accounting had done.
Okay. What
And
else?
the second year is financial accounting.
Oh, first year is
The second year
accounting.
the business.
Okay, so
Business accounting.
Okay, Jumbo is
Called,
hello, Jumbo. So I call you Jumbo or I call you Kujumbo? Jumbo, please turn on your video, please. I want to see you guys. It's not a big class, so I would like to always make sure that you are really attended the class lah. So please turn on your video and don't feel stressed in the class. I hope you can ask any question you are not understand, then you can interrupt me anytime. So just treat it as like a friend meeting and you can learn something from that. Okay? Okay, Kujambo, hi. Morning.
Good morning, Miss.
Okay, so my name is Kimberly. I'm your lecturer and also tutor for this business accounting, the accounting information system. Okay, so I have known that all of you have already done business accounting and financial accounting. So I assume you already know the whole process of from preparing journal until to generate the report, the financial report, including the profit and loss and the balance sheet and cash flow. So I assume you already has those understanding. Am I correct? Still remember? Still remember?
Yes.
So this is a short semester, so we only have 7 weeks. So it will be very packed for you because you have 2 tutorial in 1 week, but we will not have tutorial for this class as this is the first class for us. Okay, so this accounting information system will use the knowledge that you learned from previous accounting class. So you need to refresh on all those the accounting theory, the foundations, and what do you know about in the balance sheet, the cash flow, the profit and loss. Okay, the class will not run away from anything of this last. So you will use the same thing for what you learned from this course. Okay, just the difference will be that we will use accounting software so that you can really have the feeling and the touch on the accounting software when you will actually use it in the real world lah. Because we are not going to use the manual accounting recording system in the business already. Okay, because its data is too big, so we won't have the enough space, or we don't like all those manual filing in the office. So everything is either saved in a maybe drive or the database, the server in the company, or we even use cloud accounting. Means it's something like Google Drive. So you can just log into your browser and record the accounting using only Wi-Fi. So you don't need to install any software into your computer. So this is a bit different from what you learn in others business accounting class lah. So you actually doing recording. Okay. So far okay.
So far,
Okay. Okay. You can. So I don't mind you interrupting me anytime if you have any question or I'm talking too fast. You want me to slow down or you want me to repeat anything. So as I think this is not your first time using Zoom for class. You have already tried this, right?
yes.
Okay, so this lecture class and also tutorial will be recorded and I will use YouTube. I will post it lah. And also you will have the ELP system. So I will upload to ELP system. So in case you need to refresh or you need to listen what I have talked before, then you can just watch lah later on. Okay, so this is what I want you to know. And this course, the assessment criteria, you will be doing one individual assignment, okay, which carry 25 mark. Okay. I will show you the PowerPoint later. I will share your screen. But now, just like ice breaking section, we try to know each other because this is not a big class. So I want you to like really connected lah. Okay, since I cannot already attended the class face to face, so at least I can see you. So make sure you turn on your screen, okay, video, so I can look at you. Okay, don't sleep in my class. I only have 4 person here. Okay, ask if you want to ask anything. Okay, especially when we are discussing tutorial question or some case study. Okay, you can ask. And then, okay, first you have one individual assignment which carry about 25 mark. And then you will have group assignment. Okay, this group assignment is not like you need to do a long assignment. Okay, every tutorial, since we have only 4 persons, so you have to divide yourself into 2 groups. Okay, see who one you want to be with, and then you decide yourself. Okay, you divide yourself into 2 groups, and every week, my tutorial question will have 2, and there will be 2 questions. And you will need to do it. I will divide into 2. One group will be assigned 1 question, and the other group will assign the other question, which you will need to do presentations. Okay, I don't need you to do like a long presentations. You need to do about 5 to 10 minutes, so you can answer the question. And besides answering the question in PowerPoint, you need to also submit your Word documents lah. Okay, which you already have the long answer or the essay of the tutorial question. So it will not be very difficult as long as you follow the class. Okay. So at the end or in the middle of the semester, you will be also trying to use the accounting software lah. Okay. So I will give you learn about two. One is the desktop based. I will use AutoCount because we cannot use computer lab anymore in the university. So I have to ask you to prepare your computer and download the software. I will give you the link later. Okay, we will not using it until maybe week 4 or 5. Okay, we will start with the theory first. Okay, so after group assignment 25 mark, individual assignment 25 mark. Okay, the final is still we will use assignment based because we cannot have the face-to-face exam already. Okay, so we will use the assignment based, and I will assign you the assignment maybe 2 weeks or 3 weeks in advance lah, so you can have time to discuss. And so I allow you to discuss, but not copying others' answers. I allow discussion. You can even ask me or raise your question in the WhatsApp group. Okay, I will try to help. Okay, but don't copy others' answer. Okay, there is difference between discussion and also copying. Okay, so this is how this class run lah. Any questions so far?
No.
Any question you want to ask?
No.
Yes, Gunhao, anything?
Not yet. Not yet.
Not yet. Okay, so I will try to have some break in between, maybe half an hour, 5 minutes, so you can go to toilet or have some water. Okay, just don't stress, but follow the class. Okay, so now I'm going to share the screen with you. Can you see?
Yeah.
Yeah?
Yes, can.
Okay,
Yeah.
everyone's can see the PowerPoint.
Yeah.
Okay. So this class is called Accounting Information System. So we are still using the accounting knowledge, but now we will also trying to learn the IT side or how the system works to actually quickens our work, because now we are no longer using the manual way. So everything is using information system, using computer, or now even using Wi-Fi only. So you can access the accounting system even by using your phone nowadays. You don't need computer anymore. Okay. Okay. What you will learn, this is some basic introduction of the course lah. What you will learn from this course, okay, explain what is an accounting information system and how it can add value. So you learn the process of accounting. So you also learn how to recognize asset, liability, equity, expenses, and income. So you know the importance of those informations to company, and also not only to company but also to others outside party like the banks, okay, the customer, the supplier, the creditor, all those we call the key stakeholder of the company. Okay, so what the useful side of this information to them. Okay. Okay, then we have to also learn the system documentation. Okay, what you mean by system documentations? Okay. Last time we only know about the accountings where we will do the recording size. So where the accountings and the document come from? Like you have this invoice on your hand, you will record it as a sales. But where this invoice come from? Okay, it's actually from the sales team. So the process is other department. You also need to know what is the process behind all those documents. Okay, after knowing all the process, then you will have a bigger picture of how this business is running. Okay, the operations. You link the accounting with all the operations inside an organizations. So you are not like individual or separate from others. You are actually connecting, interrelated. Okay, all the departments are interrelated, so you cannot be surviving only by yourself. You need other sales team, you need the production team, okay, you need the HR payroll, okay, then all those will give you the documents, and then only you will generate the accounting report from those documentations. Okay, so we will learn about some data flow. Okay, how, for example, I will give you a case study like if you are running New Era, for example, you are studying in a university. So what is the difference of operation inside a university than comparing to a convenience store? Okay. So what is the difference of the operations? So how these operation differences will contribute to the accounting system? Okay, what is the difference and how it contributes to the accounting information system? Okay, what you need to take care and consider when you are recording, and then also, do you heard about chart of account? Have you heard of this term called chart of account? No, no. Any one of us working before? Has working experience? Any of us? Any of you?
No work at accounting.
Okay,
area.
so work maybe part-time, promoter, waiters lah. So no experience working admin or accounting side?
No.
Okay. So this is like a chart of account is the like a home page. When you're having a Facebook, you have your own profile, then the home page will show you everything. Okay, so chart of account is like a summary of the accounting, like what kind of asset you have, what kind of liability you have, the expenses, the sub account, the group. So you have a summary of the account you have. Okay, each account will have a unique code like your student ID. So that when you record, you key in, you will have how to you like key in the account, you will by code, the unique code, so that there will be not same account code. Okay, every code is unique. So this is called the chart of account. You will need to plan and then create the chart of account for one business. Okay, for example, New Era. So what kind of account you need? Okay, do you need sales or you need student enrollment numbers? Okay, so this is how you recognize the revenue. Is it by sales? New Era don't sell any product, so you don't have sales from product, but you have the sales from recruiting student. So this is the account differences. Okay, you need to know and recognize, and then how to plan the chart of account for a business. Okay, so formulate chart of account in a group of business, and then construct full set. Okay, this one I assume you have some basic knowledge already, but now we will just add in more, which we will use accounting software. So previously you will just use your pen and then you do it on paper. Okay, so now we will use accounting software. So I need you to be ready with your laptop lah. Okay, after that, I will give you the link so that you can download one accounting software. We call it AutoCount. There are actually a lot of accounting software available in the markets. So the more popular one, we will say like AutoCount, UBS, SQL. I don't know whether you heard of this. Okay, but this is very common accounting software lah, using by those company outside. Okay, beside all those traditional accounting software I mentioned just now, there are also, we call it cloud accounting. Okay, it's more latest where you don't need to install. Okay, we don't need installations, we don't need manual updating of the version, because it's just like Microsoft Word and those Photoshop. We need to update our accounting software regularly so that they have a new feature, we can take advantage of that. And also, if you install in your computer, your laptop, you are running business, you are recording every day, so your database is increasing every day. So you need a very huge space for storage if you use those traditional accounting software. So normally, company will have their own internal server so they can store. And then also you need to protect your data also. So you need your internal IT security system. So it means like increasing cost for the company to actually take care of all those things. So to overcome this issue and this problem, people come up with this called cloud accounting. It's similar to what you use in Google Drive. Means you access to your browser, your web browser, like Internet Explorer or Google Chrome or Firefox, and then you just log in using the same account, your company ID and password. You already can record accounting. Your key in your journal, generate your sales invoice, your quotations using Wi-Fi only. So as long as you have Wi-Fi coverage, then you can do your accounting. So even like now, okay, MCO time, you don't need to be in the office to doing the accounting, but you can do it at home, okay, anytime in the car, but don't do it while you're driving. Okay, so you can use your handphone to log into the system and key, or you are a manager, okay, you are a management, you want to access the report immediately, so you can check the financial reporting. You can even do some analysis lah, because people will look at maybe how is the sale last month, so that I can do something to my sales team to encourage, to push them to do further. So you can just look into the system and then ask the system to provide you some kind of report, so you can plan your next step by using that report. So this is very fast and convenient for the user now. So we will use Buku. Okay, it's a very quite new cloud accounting available in Malaysia. Actually, there are quite a number, and then but Malaysia don't have so many. We have more from overseas, okay, provider. We call it a cloud accounting system provider. So they provide the service. Okay, they help you to take care of the data security, so you don't need to have internal IT security team to protect. So anything happen, they will like compensate you, but you don't need to give you a big cost. You don't need to pay a big cost like those traditional accounting software, where the minimum cost for a basic accounting system is around 2,500. Okay, the basic version only. Okay, if you want to add some other feature, you need to pay more money. But for those cloud accounting system, you only need to pay by subscription. It's like you pay your Spotify monthly lah. Okay, how many, maybe feels $60 per month, okay, ringgit Malaysia per month, or 40, 60, 50, depend on the price of the provider lah. Okay, so this is what we were doing in this class. So far, okay? More technical than other financial accounting class. Okay, you will be doing more hands-on. Okay, this is the assessment criteria I mentioned just now. So the percentage, you can take note of this. Okay. Individual assignment 25 mark. I will assign it to you guys as soon as possible, so that you have time to do it. So it will be in a case study format. Okay, a case study format. So I will use some case study format during the tutorial, so you know how you want to tackle those questions lah. Okay, for the group assignment is tutorial question. So each tutorial, there will be 2 questions, and you will be divided into 2 groups. Okay, I let you decide your own self lah. Okay, who you want to be with. Okay, who is your group member. Then every week when we have tutorial question, you have to do some short 5 to 10 minutes presentation of the question assigned to you, and also you have to submit the words format of the complete answer. Okay, and the final assignment, because we don't have the final exam already, so this will be assignment based. Okay, I will also give you in advance, so that you have enough time to ask if you don't understand. Okay, remember, you can raise your question in your WhatsApp group, because this is not a big group, so we can discuss. So you can help each other also lah. You don't need to wait for me to answer. If you know where to find, or what kind of your suggestion, you just raise in the group. Okay. For the first class, we will not have the tutorial. So now I want you to refresh all those accounting foundation before we really go into those systems. Okay. The basic of accounting. Still remember all these keywords or not? Remember all these keywords? I'm going to ask question already. Okay. Iasb is what? This is maybe the first thing you need to know when you are doing accounting. The basic, the wall, okay, the foundation. So what is IASB? Still remember? Anyone? Anyone? Chat. Okay, Sanjita, right? Hey, you can just speak out lah. International Accounting Standard Board. Okay, so IASB stands for International Accounting Standard Board. Okay, good. So what is their role? What do they do? Okay. What is the difference between International Accounting Standard Board and Malaysia Accounting Standard Board? Are they connected? Are they from the same board? You can just speak out or you can talk. Okay, I want to hear from you, not me speaking only. It's okay, even it's wrong. Okay. What is the role of International Accounting Standard Board? What do they do? Okay. And why I write Conceptual Framework beside IASB? Okay. Do you remember what is Conceptual Framework? Okay, as you see from this term board, so it means it's organizations. It's like a committee board. Okay, those person inside this board, they will try to standardize the accounting system, the accounting standard. Okay, what do you know about accounting standard? For example, a country, what do we need? We need rules and regulations. When we need constitution, means the basic for the law, what we can do, what we cannot do. Okay, then if we means do some offense, what are the penalties and what are the consequences to that action? So this is accounting. The accounting standard board, they don't actually penalize you, but they provide you a standard, a guideline. Okay, what you should do while you are doing your accounting recording system, so that everyone follow the same regulations and rule, the standard, the guideline. Okay. When there is a standardized accounting standard, it makes we understand even the company is from overseas, as long as they're using the same standard. Okay, even here we can understand what is the company doing by looking at the financial report of that company, which is located in US. Okay, that is why we can, there is investor investing in US stock, okay, Australia stock, because the accounting standard will not differentiate a lot. Okay, so what we will learn about this IASB conceptual framework. Okay, we don't call it a rules lah for this conceptual framework. It's actually a concept. From the word we will see concept. Okay, when you are an accountant, you will make sure that you have this thing inside your brain always. Okay, during the day, during the night, every decisions you make, how to recognize the revenue or the expenses, whether you want to put it inside your fixed asset or you want to put inside your expenses account, it will be based on this conceptual framework. Okay, so can you imagine what I'm saying? So it's a guideline. It's like a constitution. Okay, how, like you buy a new washing machine, you have the manual, teach you how to use. Okay. So this is teaching all the accountants what should they have inside them, the principle when they carry out their job. their role as an accountant. Okay, this is the conceptual framework. So underlying assumption is following the framework where you need to go and have these two things. Have you still remember going concern and accrual? Okay, I go to this page. Okay, this page. What is accrual, going concern? Okay, Yuan Hao. Huh?
If no long going concern is
Yes, what is going concern? Still remember that?
like there was
What?
the company can be
No need to follow
continue,
the exactly sentence lah. You can explain it by your own words. What you
like
understand by.
the company CEO have died, another person can be
Okay. You get the point. You get the point. So you guys understand what you're now trying to explain going concern, Basie?
A bit understand.
Huh? Forget already. Okay. So Jumbo, are you still there?
Yes.
So what is going concern? Still remember or not? Are you all guys accounting student in secondary school?
Yes.
Yeah. Then maybe you know this, but I forget. You are learning in English or BM in secondary school?
BM.
BM okay. BM, I don't remember the BM word already. Going concerns means we will assume the company, when they start the operation, the business, it will not end just by saying, oh, okay, I'm done. No. Or for example, like Yuan Hao say, when the CEO die, okay, the director dies, they will continue the business. They will have successor. Okay, the people that will take on, replace the dead CEO. Okay, they will always doing their business in the future. Okay, the accounting report, the financial report is presented in a way that the business will continue their operation in the future, unless they have some significant event happen or they predict with very confident that they will cease or they will stop the operation. Then this, we call it material information, must be recorded in their financial report. That is why if you really get your hands to those financial report, the financial report of a company, you will get those report in a very thick book, like a dictionary, because they are not only reporting their balance sheet, their profit and loss, there actually a lot of information inside the annual report. Okay, so going concerns that needs to be taken into consideration when they're preparing the annual report. So if anything happens, for example, like AirAsia now, okay, what happened to AirAsia yesterday? Have you read of the news? No. How do you think about AirAsia since MCO? Are you, if you are Tony, can you speak?
If I'm Tony, now I will panic, very panic.
Very panic. So do you know what happened yesterday? Okay, actually a big because something, maybe this is in angel investor. I call him angel investor because a very big investor. The news say he's a poker king lah. Means he play poker very well. Okay, the poker king from China. I can't remember his name. Actually, acquire a very big amount of share of Asia. They need funds. Okay, they need money. So if this significant event happen, okay, it have to be recorded. So we will expect this information to be presented in next annual report. But the news already come out, so I expect some movement of the Asia price today investment. Okay, this is stock lah. So when news come in, okay, it will affect how the performance of the company. So AirAsia is facing a very big challenge lah, since tourism cannot be running like usual during this MCO time. So if you have tried those food delivery company like Foodpanda, Grab, maybe you were aware of AirAsia.com. You can try to search. AirAsia.com already like convert, or I would say diversify their service to food delivery on land, not by air, on land, but their business focus in KL lah. Okay, so when I try to search in Kajang area, because they provide free delivery within 15 kilometers. So when I search, I only can find the nearest is IOI City Mall, one of the restaurant lah. Okay, they are inside this food delivery platform. So if you order by AirAsia.com, you can try. But for those far away, like in PJ, more than 15 km, you have to pay quite a lot of delivery. Okay? So you can look around. Since you are a business student, you can look around what is happening during this MCO time. It's a very challenging time, but at the same time, I will see very many opportunity for those business. Okay, either how you see this whether this is a threat or this is an opportunity. Okay, so this is what happened to AirAsia, because AirAsia share price has been fluctuating around lower than 1 ringgit Malaysia. So you have confidence. If you have confidence in AirAsia in the future, you think AirAsia will still like those time, or even can improve to be better, will have more business, then maybe it's a good time to have some of those share. Okay, so you can be more alert of what happening in the market lah. Okay, so that is going concern. Mean you assume AirAsia still going. Okay, they will not close their business easily. Okay, they cannot close because quite many big funds holding their share. Okay, and what happened if the company bankrupt? So cannot lah. So we will assume this going concern. Even though maybe one day Tony is not here, so maybe some other guys will replace him. Okay. So this is one. Another one, accrual basis. Accrual. It's very important when you recognize your revenue and expenses. Means when you do your sales, it's related to your invoice. When you sell your things to your customer, okay, especially when you sell it on credit, means they don't need to pay you immediately by cash. They can pay you after 10 days, 20 days, and by a limit, maybe 60 days. Okay. So do you record your sales now, or you record your sales when you receive the money?
I think this.
Why you laugh? Why you laugh, Sanjita? So when you record? Now, or when you receive the cash?
When receive the cash, I think it's.
Okay, don't think about all those shopping mall because they are doing sales by cash. Okay, when you buy your thing, you pay on the spot. But what about those supplier? Means when you go to shopping mall, you see those product or the item display on the wall there. Okay, do them the supermarket or the shopping mall like Tesco, Giant pay their supplier on the spot when they receive the item? Do they pay on the spot? Yes, Jumbo?
Credit term.
Yes, it's like by credit term. So they will gather all the invoice together, and then they will settle the bill by monthly basis. Every month they will have a statement, okay, showing the outstanding, how much the supermarket, the Tesco owe the supplier, then they will settle this payment. So on the supplier side, do they recognize these sales when they deliver the item, okay? The bread, okay, the gardenia, the Maggi to this Jesco or Tesco? When do they recognize the sales? When they deliver the product, the item, or when they receive the cash, the payment from Tesco? When? Which time? A or B? When they receive the cash from Tesco or when they deliver the good to Tesco? A or B? Still remember A or B?
I think B.
B, okay. You think B. What about others? You need to bet on one lah. A or B? When? When they receive the cash or when they actually already delivered the good?
Actually, both also have.
Okay. Jumbo is right or wrong at the same time. So if you have credit term like this type, okay, when you deliver the goods to your customer, means your sales is already performed. So you will recognize your sales at the time you deliver your goods to your customer. Okay? It's different from the cash basis. Okay? Cash sales is very straightforward. You receive the cash and you sell the item to your customer. So of course you will record immediately at the point of sales. But not all sales is done on cash basis. So most often those supplier where you buy in big amount, they will give you credit term. Credit term means you can pay later. Okay? Maybe they allow a 1 month, so you can pay in the end of the month. So this is called credit term. But these sales you have to record when you delivered already the goods to your customer. So you will record your sales by using invoice. So invoice is used or involved in the transaction when you have credit sales. Okay, so you have to be familiar of those words when you work in accounting area. So you need to understand what is credit term. Credit term means you are allowed to owe the supplier. You don't need to pay the sales immediately, and the credit term is decided between you, okay, between you and your supplier or you and your customer. How long you want to give your customer, okay? Then this is called accrual basis. We will recognize the sales when the sales is performed. It means you already sales the good, or when you already done your service. Okay? You already give up your service. For example, security guard. Okay, security guard. Or those cleaning service inside office. Okay, some office, some commercial building will hire, outsource their cleaning service to one like those hourly cleaning service lah. You can go and find one. And then those people, the auntie will come in and clean your office every day or maybe once a week. But you don't need to pay them immediately. You don't need to give money to the auntie. Okay, thank you, you clean. But you pay them maybe every week or every month. So, but for the cleaning service, the company, they have to recognize the sales when they already assign the job to those auntie. Okay, when they perform, they finish, they have to recognize the sales. So this is called accrual basis. Okay, okay or not? Okay. So have to refresh your foundation of those accounting assumption. So this is most important assumption in accounting. Okay. Every time they ask you what is accrual basis, you have to make sure you understand the concept behind it. Okay. When how you recognize your revenue and also expenses, because like insurance, some insurance you will pay maybe after the due date. Okay, but you also have to recognize the insurance or the expenses when it is occur, okay? When it happens, okay? When the due date is there, but you haven't paid, because you take some time to maybe prepare the payment, you need to wait for your CEO to sign the check. So the payment is not out yet, but the due date is already there. Okay, today is the due date of your insurance, your fire insurance of your company, or the renter. Okay, it's already due, but maybe you take some time to prepare the check and wait for the signature, and then wait for the bank to actually clear the check. Okay, so it will be not Darren or not the same time when you incur the expenses and also the payment, but you have to record your payment the date of the due date. Okay. This is called accrual basis, not by the payment. The best way, of course, you pay when it happened, but normally in the real world, it will take some time. It will be a lag between these two. So you still need to record your expenses at the time of payment. Why you need to do like that? Because it to avoid you to like delay the expenses. Maybe you see like, oh, this month my profit very lousy. How if you don't have this kind of assumption or this concept inside accounting, you will try to delay your expenses. Okay? Maybe I can delay my expenses to make my profit look better. Okay? So they will have this kind of thing happen. Okay? So no, accounting standards say no, you cannot do this. Okay? You must recognize, you must record the expenses when it happened, okay? Not by payment, okay? To avoid those things. Okay? So this is the two very basic and very important. So make sure you understand the concept behind. Okay, so this is some of the summary of what is conceptual framework. Okay, this is a guideline to accounting standard setting to ensure the standard are consistent. Okay, consistent is very important so everyone can understand. Not that if you want to expand your business to other countries, then you will need to deal with the investor in Thailand, Indonesia. Okay, then if the accounting is not the same, the standard is like here one little, there different, then how do you attract those investors? Okay, when your standard is consistent, your accounting report they can understand, you can understand. Okay, so it make it easier. Okay, so are developed based on identification of good practice. So remember, standard is not a rules. If you don't follow it, it's not like you are getting any penalty or fine or masuk penjara, unless you are found guilty, or you make a very, very big offense, taking money laundry, maybe few millions. Okay, even that happens, if you run away, the police cannot capture you, it's still the same. Okay, you know, one Malaysia. Have you heard of One Malaysia, the company? Okay, how much money lost? Okay, just lost like that. Okay. So what happened to the person behind? No, nothing happened. Nothing happened. Okay, if you interested of the story, you can go and find the book. It's very interesting. You have to know the person behind this is a Chinese guy from Malaysia. It's a Penang Lang, means the Penang person. Okay, the fat guy. Fat guy. Liu Tezuo. Okay. Yes. The guy names Liu Tezuo. So he is a very smart guy. The police can't even trace him now after a few years. Okay, so he's still enjoying his life. So this is based on the good practice. So it's not like a rules or regulations, but we will assume when you graduate, you have the qualification as a competence accountants. You will have those good practice in you. Okay. Can be prescriptive or descriptive, seek to provide a set of principles. So it's just a set of principles lah. Okay. However, it is separate from international accounting standard to avoid binding. Okay, if you really look at the accounting system, if you have time, go and search any of the company annual report. You can just find in Bursa Malaysia, the website. Okay, just click any one of the company annual report and then go to the note to financial statement, the last part lah, always the last part, the notes to financial statement, where they will explain the elements in detail of the financial statement. Because all those financial statements like profit and loss, they will only have a summary like profit or sales, how much. But how do they get to this figure? They will explain in the note. So you will get more detailed information in the notes, and also we will know how they record this. They will explain what kind of, which standard they follow. Okay, standard numbers 7, standard 17. Okay, how do they record those revenue, and what are the component in the element? Okay, so you can go and take a look. So why you say it is the separate from the accounting system? Conceptual framework is just like a guideline. Standard is a method. Okay, method, the way how you record. Concept is what you have in your mind. Okay, you cannot overstate your expenses. Okay, you cannot like make your sales unfaithfully represent. Okay, you tipu your sales. You cannot do like that. That is based on a good practice. But standard, they will list one. You have to recognize the sales when A happen, B happen, C happen. It's a method. Okay, so it's different. Of course, the conceptual framework will assist the board to develop those standards lah. So if they see they need to do improvement to the standard, they will review back all those conceptual framework and then see whether they need to do improvement or not. Okay. Or example, if you cannot find any treatment, any method from the accounting system, for example, Malaysia may have their own Malaysia Accounting Standard Board. So you will follow Malaysia Accounting Standard Board. International stand for IASB, okay, IAS standard. Malaysia have our own MFAS, okay, Malaysia Financial Accounting Standard. So we will follow our own country's version. So if you cannot find any treatments, any method, how you gonna treat this thing? For example, when your customer default, they don't pay you. Okay, I don't understand how to record this thing. Should I put in my accounting? I already recognize these sales based on the invoice. For example, 5,000. Okay, I already record the sales in my sales. This customer, but the customer haven't paid me because by credit term, I give the customer credit term half year maybe. Okay, then after half year, the customer come and say, sorry boss, I bankrupt, I no money pay back. So how you trade this? So you don't know, maybe you are not experienced and you haven't tried this thing. Okay, so you don't know. So you have to refer, you go back to the accounting system. Okay? You go and find Malaysia Financial Accounting System. Find. Okay, how to trade these kind of situations when my customer is default. So if you find, okay, there are treatment for this. If let's say before this don't have treatment, how? Then you have to refer back the conceptual framework. Okay, when your Bible don't have this treatment, okay, the accounting system don't have this kind of treatment, then you have to go back to the concept. You have to think, okay, should I? Is it affect my profit? Or if I present this information inside my accounting report, it will make a difference or not? So it will affect the decision of my supplier, my customer. Okay, you have to based on your concept. So this is another thing, the characteristic. Maybe the amount is small, 2,000. You think this is not material, not significant to your customer, the business, then you can just write off. means you just tick off the sales. Okay? You don't need to record immediately. But if let's say your customer owe you 1 million, so this amount is very significant. It will affect your business health. Okay? Maybe you will lose a lot of cash. You need this cash. Then it's material. Material means significant. Then you have to record. Okay? If you don't find any treatment in the accounting standard, so first you follow standard. So, but if you cannot find any method solution from the standard, you go to the framework. Okay? You go to the framework. Okay? So don't worry if let's say next time you are really in accounting line, you can just search online. Everything is available. Of course, if you are doing accounting, maybe you will go forward to ACCA. Right? Then you will be more professional. Okay, a standard is like your Bible. Okay, it's like lawyer. They needs to know the law, the constitution is like a Bible. So you need to know. Okay. Okay. So conceptual framework is the objective that cover the Bible. What is inside this Bible? So the objective of financial statement. Okay, qualitative characteristic of informations that determine. Okay, this we will look at it later. Definition and recognition and measurement of financial statement element. This is very, 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 very important when you actually doing the accounting. Okay, definition recognition is what is revenue, what is asset. Okay? Do you recognize a pen as an asset or expenses? It comes against what is the definition of asset. Is pen your asset? Is furniture your asset? Computer your asset or expenses? So you have to know what is the criteria to be considered, okay, when you record this thing. Okay. Material and significant is just one of the factors you need to know. For example, if based on this significant and materials factor, pen is just expenses because pen is very cheap. One pen maybe less than 1 ringgit, so it's not significant. Why you record a pen as asset? Okay? This is what you need to differentiate lah. But if you are a stationery shop, you sell all kinds of stationery, exercise book, pens, ruler, all this. Then maybe pen is your asset. It become one of your stock, the current asset. So you need to know the recognition and the measurement behind all these things. Okay, concept of capital. What are the capital? Capital is the model that you put into your business to start up. Okay, so capital can be in many forms. So what are the forms that you know? When you want to start a business, where can you get your capital? When you want to start a business, now you are the boss. So where do you get your money? The easiest way?
Your own money, no?
Yeah, no, your own money. No? Then your own capital, no? Maybe from your bank, your cash. This is your own capital. Okay, beside your own capital, maybe I don't have so much money. Where can I get from capital?
Bank, no?
Bank, no? So bank is borrow, loan. So loan can be a form of capital. Okay? But they become also your liability lah. So accounting always two ways, a double entry. So it's a capital, also it will become your liability. So it's a two form. So beside cash, your own cash, and then the bank loan, what else? Jumbo want to say something? What else? Where you can get your money?
Share.
Share. Yes, very good answer. So share means how you get the money from share?
Selling our share.
Okay, you offer your company share to others, means you attract others investor to join your company. They pump in capital, they give you money, but they also own a portion of the share of your company. So can be a private share, means you only offer to a few friends or family member. Okay, a private limited company. Okay, you have a few investors. Okay, you share, and you contribute your portion. You share the profit. And the other ways is a big company. You want to have more money, like Asia. You are confident that your company will grow into a very, very fortune company. Okay, so maybe you can offer it to the public. Okay, you offer to the public by apply to Bursa. Okay, the Bursa Malaysia. You say, okay, I want to offer my company share to the public. So you have to follow the step lah. Okay, how you want to maybe to present to Bursa, you are a healthy company. What are your future vision, mission? Okay, what are you going to make in future 1 year, 5 year? Okay, the project of your profit, your sales. Then how you convince your investor, what are the price? You involve a lot of party lah, the bank, the trustee. Okay, they will write and then evaluate how much your share is valued. Then you offer it to the public. The public will buy based on the market price. Okay, so this is one of the kind. Okay, so capital. Okay, we have already finished this. Any questions so far? Any question? Am I talking too fast? Okay. So this is the first class. I just wanted you to like start running your brain. Okay. Okay. Go back to all those accounting class you have studied last semester, last year. Okay. Try to refresh as many as you can, because after this we will not going to like teach you again the double entry, what is revenue, what is expenses. So you have to know already. So when we have the accounting system, I will just give you the assignment and then we will go through the system more. I will not guide you one invoice by invoice. Okay, which invoice, this is sales or expenses? Okay, how do you record? And then do you recognize it as expenses or what? You need to know by the point you see, you look at the document, okay? Or the transaction, you need to know. So try to refresh as much as you can all this. Okay? So far, any question? Any question?
So far, I want to go to toilet.
Okay, I already know. Okay, 5 minutes break, go to toilet, drink some water. Okay, go. Jumbo, no need to go. Jumbo, where are you from?
I'm from Kajang here, Miss.
Kajang. So you are staying in which part of Kajang?
Jalan Reko.
Jalan Leko. Oh, near the MRT station?
Yeah, almost near.
Okay. So you are from JB Jalan Bukit ah?
No, Yuhua.
So you can speak Chinese lah. Understand
Mm.
Chinese. Luckily, I didn't talk anything bad in Chinese. So how far you find this course? You are taking BFA, right?
This is my second year last sem.
Second year last sem. So how's your performance last few semester? So far, okay.
Last few semesters so far okay, but because of the online classes, last two long sem, so important subjects you are not able to communicate with lecture very well. Like accounting, we usually done it on the spot and let our lecturer to check. but because of online, very difficult to communicate with lecturer. So very difficult how to show our working to lecturer.
Okay. So even the long semester, you take all the subject. Every subject is running as usual,
Mm,
all online.
yes, all online.
How about final exam? You still go to the school?
Online classes don't have final exam. We all on base assignment based, and then some courses, some subjects they have quizzes and also presentations based on like that lah.
Okay, well,
Mm.
this semester
But we only so far have one subject have final exam, but that one is open book. Mm.
So in this program, you will learn banking, finance, then international finance, right?
Yes. Next semester, year 3 subject then only have international finance, corporate finance, everything.
You teach which lecture?
Hmm?
Which lecturer?
For money and banking is Mr. Chua.
Mr. Chua. Oh,
Mm.
Mr. Chalapo, is it?
Yes.
Okay, this video is recorded, so I cannot say anything. Enjoy the class. Enjoy.
Already finished already. Last semester.
Fail.
Last semester he taught us 2 subjects.
Okay. Then how? Still the same. I think he has the same character.
Okay already.
Okay.
Because online he not very strict like in face-to-face class.
Lucky lah, you guys.
But face-to-face class is very strict.
Oh, last time I very stressed for his class, especially tutorial.
Yes.
He
Have
will
to present.
shoot you with question. Shoot you with question. So you have to make sure you prepare well and then think what question he will ask.
Yes.
Okay lah.
But my unlucky first semester, most of the tutorial question I have to answer with my group mate.
Huh?
Most of the tutorial question is called by me.
Call by me? Call by you?
No. He called me.
Oh, okay. Then you have to think why he call you.
Yes. He
Yeah.
called me every time.
There's something wrong with you lah, brother. Think properly.
Every time he called me.
There must be reason why he call you. So accounting, okay, last few semester, pass. Everyone pass.
Yes.
Okay. Okay, back from toilet. I sent in the chat your I share the tutorial question for tomorrow. Don't worry, it's a very simple one because it's a first class. So have you decided which is your group? Okay, you prefer to work with who?
I will work with Pei Shi.
Okay, so this is like a woman as man. Good, BS boy. Okay, you download the question. So how you answer the questions is like, there will be 2 questions. You can answer because now we cannot use any paper or what, submit by hand. So you can use Excel, PowerPoint, or Word, or you prefer, what else? As long as you present your answer in a neat way lah, okay? So for example, question 1, I will suggest you use Excel lah, because you have to use accounting equations to answer the question. Okay, you need to tell me these transactions, how you recognize it. Are they asset, liability, or capital? How do you recognize? Okay, do you still remember the most important equation in accounting between asset, liability, and capital? The equation still remember. So invest cash as a model, okay, as a capital. So how do you record this? So this is the transaction, the double entry that you must already know very well, okay, very well. When people tell you this transaction, you already have in your mind how it will be presented in account way. So a few of these refresh, so you can do it in Excel. So you can create a table, and then one columns asset, the second liability, and then capital. So you have to know invest 15,000 in cash is belong to which. So you must have 2 entry, double side, okay, double entry. So you will have 2 entry for each transaction. So later we'll explain. I will give you some example first in the lecture slide, then you can do it. Okay, every one of you, you need to answer question 1 and 2 with your group member. You can distribute the word among yourself. Okay, but for the presentations, you only need to do 1 question. For example, okay, I assign. Sanjita and Paisy, you can present question number 1. Okay, so you only need to present question number 1. Since you are presented or you do it in Excel, you can show us the Excel and then explain directly from the Excel. Okay, you don't need to go and do another PowerPoint. Okay, you don't need. Then for question number 2 is similar. Identify the financial statement on which each of the following account category would appear. Okay, asset, common share, dividends, expenses, liability, revenue. Okay, all these elements where they belong to. Okay, which financial statement? Profit and loss, cash flow statement, balance sheet. So which? Okay, then indicate the normal balance. Okay, whether this account will always carry debit or credit. Okay, beside. And then provide an example for each category with justification. Okay, example of asset. Okay, so don't forget there is fixed asset, there is current asset. So provide example for each of the category. Okay, with justifications means why it is called asset. Okay, you have to explain. Okay, you can use the definition later in the slide. Okay, you want me to send you the slide also can. Okay, later I will share with you the slide. Okay. So for this question 2, is assigned to Jumbo and Yuan Hao lah. Okay, so your group will present this question 2. So the group assignment 25 mark will be taken for this presentation and also your answer lah. Okay.
Yes. Which question? We cannot see any question in the screen.
No?
No.
can you see it in the chat box? I share with you one PDF. So you download it.
Box.
The chat. Have you received
No, chat.
anything in the chat box?
No, nothing.
Tutorial
Nothing.
one.
Yes, I got received in the chat box.
Okay, Yuan Hao try to refresh or I sent a PDF file in the chat. You receive? I will send again in the WhatsApp. Wait,
No, I think because I'm using hand, so I can't receive any.
Okay, you're using it.
uh,
I send to WhatsApp also. Wait, Okay, so I also send in your WhatsApp group. You can download either way. Then open it. You will see two questions inside. Tutorial. Okay, so everyone can see now?
Yes.
Okay, so this is how the tutorial look like. Two questions. You have to complete two questions. Like what I say, you can use Excel to do question number one. I think both also you can use Excel. It's simple because you can create table. For question one, Sanjita and Basie will present, but they also need to do question number two. Just they present question one, okay? So you don't need to do PowerPoint because you can straight away present from your Excel, but try to explain as using your own words lah, okay? Why you record this way, okay? Why they belong to asset, liability, and capital? What is accounting equations? So this is all what you have been learning. Okay? You already know it. Just a refresh before we really go into the system. Okay, this question number two. Identify the financial statement on which of the following account category will appear. So where do asset, common share, dividends, expenses, liability belong to? Which financial statement? Are they in balance sheet, income statement, retained earnings statements? Okay, where do they belong? And then you second answer, you need to provide, are they always debit balance or credit balance? Why? And then provide example for each category with justification. So give example for asset, common share. I just need one example, but you can provide more. And then justification is the definition, why you recognize it as an asset, why it is common share. Okay, are there any justification? So it will be in the slide later. So it's a warm up lah tutorial. I call it a warm up for you. So we will listen to you tomorrow during the tutorial. So far, okay? Can we continue?
I'm okay.
Others, okay? Any question?
No.
No, okay, then we continue the slide. Share screen. Okay. Okay, we stopped here just now. Qualitative characteristic of financial statement. So just now we know that there are two very main assumptions we need to be always aware of when we are doing our recording, okay, our journal, the presentation of financial statement. This is a very basic foundation assignment, the assumption. Okay, beside that, the financial statement is presented in a way that there are a few quality characteristic that the financial statement must have lah. Okay, the first one, understandabilities. I will just go through. This is like what you need to have in a financial statement. For example, my house is green. Okay, my house is white color. The descriptive, the adjective, how the house will look like. Okay, so how the financial statements look like. So first, it must meet the quality of understandability. Means you will present in a way that people can understand. Even I don't understand accounting, when I look at your financial report, I know what you are writing. I understand what you are trying to present. Okay, so the terms used in a financial statement is actually very straightforward. For example, sales. So we can know, okay, they do selling fashions, or they're selling furnitures as their sales. So it's very easy to understand. And also, we will assume that the reader already has some basic knowledge of accounting lah. So they will know how to interpret and analyze the financial statement. Okay. Second, relevance means is the information really important to the stakeholder, the person involved in the organizations. So we have many parties in a business. Internally, we have employees, we have management team. Okay. Outside, we have customer, we have supplier, we have public, we have the bank, okay, we have governments. All those are party related in our business, and they are interested in the performance of our company. So the information that we present to them must be relevant to them. Means they rely on this information to actually make decisions. For example, like the example I gave you, what happened to AirAsia, a big investor joining in. So is this information really relevant to the investor? Okay, so if the accountant, the company think that this is very relevant, then they must record inside the financial statement. So this is called relevant. And also, relevance carry the time value. Means you must record in very fast. When it happened yesterday, you cannot tell the investor maybe 1 year after. It's no longer relevant. It's already past. So relevant means is latest informations. Okay, investor needs the latest information to decide whether they want to hold the share or they want to sell off the share. So these are the latest information that they care about. Even this is correct, this is accurate, but if you report it 1 year after, it is no longer relevant. What happened is already happened. So the price drop or goes up is already happened. Okay, the investor cannot do anything anymore. So relevant means fast. Okay, then the third one, materiality, is whether the information is significant, the amount is big enough to affect the decision making. So if it's not really so significant, then you can just maybe tell in a note, okay, or tell in the off balance. So you no need to present in one of the element. Okay, so how you decide whether this is material is very subjective also. So it depends on the company, the accountant's experience, and the company policy, whether to report or not. Okay, so material means how significant, how big the amount. Okay. Then the fourth one is reliabilities. Okay, reliability, why I have those subgroup? Because it's some of the characteristic you can understand by looking at each of the subgroup. Faithfully representation means you have to present it honestly. Okay, you cannot hide any information. If you hide any information or you try to control the financial statement because you want to maybe do some insider trading. Okay, insider trading means you have the information first, but you don't want to tell the public. So you have the opportunity to take advantage of the information. Maybe you sell or you buy the share, then you earn from the share price going up before the public know about this news. So this is not faithfully represent. You already hiding some information, or you try to omit, you try to not telling them, okay? Or you tell other things, okay? You tell maybe, you hide some, you tell some, you don't tell all. This is not faithfully, not honest lah. Basically, it's not honest. You don't tell the accurate things in the presentation of the financial statement. Okay, substance over form means, are you telling the truth or not? This true means, do you telling the financial effect of the transaction? Okay, one example is very simple, is if you you purchase or you lease, okay, a car, a vehicle. Some company, they can means they don't buy the vehicle, they don't buy a building, or maybe they don't buy the machinery for their production. They lease, means they rent. Okay, so the machinery, okay, the assets doesn't belong to the company. By legal term, they are not belong to the company because they don't own it. They rent from other party. But in financial term, or the substance, the real happening inside the company is actually this company using the asset. They using the machinery to do their production. Okay, so this machinery is providing sales to the company. So the substance is that the company should also recognize this thing as their asset. But just that this is a lease term asset. So you have to mention in other part of the financial statement. This is a lease, not they purchase it by cash or what. Okay, so substance over form means you have to tell the truth, the financial effect of the transaction, and not just the legal. The legal, you if you don't buy it, you don't have the title, like the housing now. Okay, you don't actually own the house when you purchase the house. Normally, the bank own the house title until you settle the loan, the outstanding money loan. Okay, so you not owning the house until you settle, like you buy the car also. Okay, so the substance is actually you using the asset to for your business benefit, but by legal you don't own it, so you still have to record this. Okay, you cannot escape. So substance over form actually bring a lot of question in the real world. So later you will look into one of the example of case study, and you will also have chance to actually go through the video. I will not let you to watch here lah. I will give you tutorial question. One of the tutorial question will be related to this substance over form, but not this week. Okay, I will just give you a look what happened to this company. Okay, why substance over form become a question? Okay, because it's a very subjective point of view. How do you decide which is substance? Okay, which is you need to report. Okay, neutrality is either you present it by objective view or subjective. If you understand it by Chinese, we call it 客观 and 主观. Okay, so in financial reporting, you cannot do it by subjectivity. So you cannot have your own view. I feel that this company, okay, you cannot present it in a way that you put in your own opinion. Cannot. So you must be objective. Okay, you cannot support which side. Okay, you cannot say that, okay, I support A, I don't support B. You cannot bring in any personal opinion inside the financial statement. So this is neutrality. Okay, prudence. Okay, prudent. I think everyone understand what you mean by prudent. Okay, so prudence means you cannot tell, you cannot exaggerate, you cannot make your profit look very big, you cannot overstate your revenue, okay, you cannot understate your expenses, just try to manipulate how the profit look like. So prudence is always the main criteria or the characteristic of an accountant. So when they do budget, they will always like concerned about cost. Okay, we have to be prudent. We cannot be too optimistic. Okay. If you look at the difference of a marketing side person and a accountant, you will find some differences between them. Always the marketing person will be more optimistic. They will have a very like I projected next month profit will be increasing 20%. Okay, they will be have a very positive view for the future. But for accountants, they will have more prudence in their view. Okay, they will consider, okay, what are the risks, what are the track happening in the future 1 month, what are the effect that will cause our sales to be going down. Okay, all those factors, the costing factor, the accountants will be considered. Okay, comparability is that normally in an accounting or a financial statement, they will not only give you 1 year figure. Okay, in a summary part, they will always give you maybe a few years, even 5 years, up to 5 year comparison of the performance. Okay, the least the minimum you will see the past years. Okay. Inside the annual report, you will have this year performance comparing to the previous year, the minimum, or even some company provide you with up to 5 year information, so that you can compare. Because a financial report will not give you any useful information if you do not compare to the previous one, or you cannot compare to other competitor. So it must have the quality of comparability. Okay, this is all the characteristic of financial statement. Okay. Okay, this is what I will give you some basic understanding of this case study. You can go online and search about this company, a very big scandal, Enron Corporation. Anyone heard of this? Sanjita, you heard of this or not? No. Okay, this is one of the biggest bankruptcy in US during 2001. Similar to what happened in 2017-16 when the subprime crisis. This is earlier a bit. Okay, so this company trade in derivative future. Okay, know what is future contract, forward contract? You learn in financial. Okay? You can fix your price now, and then you can perform your contract in a future date, so that you have a confirmation of the price now. So this company, they deal with this type of forward and future contract. Before that, this Enron Corporation is actually a energy company. They trade natural gas. Okay, so they supply gas, and then they buy gas, and then they sell to the customer. Okay, they are the middleman. So that they use a lot of forward contract and future contract to hedge the price. Okay, but this company, due to some the CEO and the person behind the accounting, they try to make money, and they want to make the company look very profitable to their investor, because they deal with a lot of trading. Okay? They sell and buy, sell and buy, sell and buy, sell and buy, until they even trade on the weather forecast. Weather, It's like gamble. You gamble later in the afternoon, they will rain. So they buy. They have this contract. Okay, until this stage. Last time. So they are transforming themselves from energy company to trading company. So it's like a share company. They have their own trading platform. They have the investor selling, buying the contract. Okay. So weather forecast, do you have actual physical product for weather forecast? You don't have. So they are like gamble. Okay. So they make it very profitable. They try to manipulate the accounting by using some of the accounting method, mark to market accounting. Okay, if you see this mark to market accounting, compared to history costs that we use. Normally, when we buy an asset, okay, don't care whether it is a investment in share or buying of a fixed asset like the furniture, the machinery, we will record it as historical cost, means the purchase price you record. Okay? You don't record it based on market value because you are not sure about the market value. You only will report it in the notes as a supplementary information. Okay, you give a view to the user, the reader of the report of what could be your fair value, what could be the market value of the asset, but you don't treat it as means you don't record in your profit and loss or balance sheet. You just provide a supplementary information. But for this company, they use the mark-to-market accounting method. Why it happened? Because during that time, US have a very loose control on the accounting presentations. Okay, always US, like, they are very free. Okay, as long as you follow the concept, they give you the authority to decide how you want to present. So it makes US how do you say, a very attractive investment place. A lot of companies like to be like, they want to offer their share to the public. They want to list it on the US market. Okay, because during that time, they have a very loose control. They allow this mark-to-market accounting. So this company, they make use of this advantage and use this to make their profit look very attractive. Okay, we will talk about this case in detail after this. Okay. Beside that, they also use other method, other tools. We call it special purpose entity. It will be more, maybe a more challenging for you to understand this, but try to understand where, okay, you are the main company, okay, but you have other business that you don't want to record inside your company statement. So you create an empty company. We call it special purpose entity. It's still used in the market nowadays. When you want to do some investment or you want to do some, we call it securities. Security means you want to list your share or you want to do some project in other sector, you will create this special purpose entity to raise fund, to ask for money, and then also maybe to so that you can push some of the asset to this company. You don't need to record. So they make use of this method to actually hide some of their losses and then some of the liability. Okay. So improper reporting of share issue. So they use this special purpose entity to report that means they use this SPV to take loan from the bank, but they don't record inside the main company. They record as a sales from this SPV. I will provide you a journal or a YouTube to watch later on. So this is one of the many cases where accounting become a fraud. Okay, they try to use accounting as a way to do money laundering or to do make money from insider trading. But nowadays it will be more difficult because accounting standard become more tight than before. So this is one of the case happened in 2001. So already 20 years back. Nowadays is better already. So a lesser case of this kind. Okay. Okay, element of financial statement. Okay, we go to the main part already. Okay. Okay, what are assets? Still okay, everyone? Blur already? Okay, this is concern about your tutorial. So what are assets? Do you understand by looking at the definition? Resources controlled by the entity. You have the control over the entity. You can make use of it. Okay. You can use it to generate sales. It's controlled by you. Okay. Maybe the legal form is not under you, but you still can control. You maintain it. Okay. As a result of past transaction means you buy it or you lease it. Okay. From which future benefit? Okay, this is most important now. Where you have the benefit from this asset, you use it in your sales, then it becomes an asset. So give me example of asset.
Machine.
Okay, machine, if you are a factory or manufacturer, so you use machine. So machine become your asset because you control, you buy it, you lease it, and you use it to make production. Okay, it fulfill the criteria. What others? Lie. Example.
Property.
Pardon?
Property.
Okay, property. Maybe you have your own building, your factory, your office. You buy it, you rent it. Okay, fixed asset. So this asset is we can subdivided it into fixed and current. So fixed is where there is no changes for more than 1 year, and current there will be changes lah. Okay, so the two example you give, property, machinery, they are belong to fixed. Okay, normally you will use it in more than 1 year. You won't change your building every year. Okay, you also won't change your machinery, maybe just some part of maintenance. Okay, improving. Okay, you won't change, buy and sell your machinery so fast. Okay, what others belong to fixed asset? Can you think of any?
Equipment.
Equipments. Okay, equipments, it can be IT equipments, computer, office equipment. Okay, because machinery can also become one of the equipment. So it depends on what kind of equipment. So if you're talking about office equipment, okay, you may have server, you may have computer, printer, okay, all those. What others? If fixed assets might be in physical form, can it be non-physical form?
Yes.
Example.
Royalty.
Okay. What else? If you are like a designer or you are a singer, musician, you have,
Copyright.
yeah, then you have trademark. Okay. So asset can be non-physical form. Okay. Any other example? Ada lagi? Okay. Land can also be lah. That's all. the common one lah. Okay, then furniture, all kinds lah. How about current asset?
Cash.
Okay, cash. The form will be changed. You can use the cash to buy stock, and then you will generate cash from sales. So the cash is revolving, changing very quickly. So it will belong to current asset. Okay, beside cash, bank, what others?
Accrue income.
Hmm?
Accrual income.
Okay, income. Accrual income is or in a simple way, we will call it account receivable. Account receivable, your debtor. Okay, you sell to your customer in credit term, account receivable, AR. Okay, you are going to receive from them. Okay, so this is also as current asset. What else? What always change but also asset?
Inventory.
Yes, very important, inventory. So if you have means if you're selling product, you will have stock inventory. So inventory become one of the most important kind of current asset. Okay. So determine whether the following constitute as asset. So beside those three definitions. So when you are doing your tutorial questions, you can refer to this as reference. Okay. You have to think whether, okay, the example you give are resources controlled by the entity. As a result of past transaction, are they fulfilling these three definitions? Okay. Determine whether the following is an asset. A heap of rusty metal, rusty metal, all the besi, worth 10 ringgit as scrap but costing 20 to transporting to the scrap dealer. So do you recognize this as asset or what? Okay. If you don't think this is material, the amount is not big enough, or this doesn't bring you any benefit, the cost is even bigger than the benefit. So is this fulfilling the definition? Okay, the benefit derived from next year's sales. This is like projecting your next year's sales. It's just a budget. You forecast. So are they asset? Cannot be, because it's not from past transaction. It's just future forecasting. So you cannot treat this as an asset. Okay, it's different from Enron Corporation. They actually trade the sales not performed as benefit, as asset, as revenue. So this is wrong. Patent of new product. A new product haven't been market, okay, and maybe it's not record yet, not registered. Are they asset? Or the patent already registered? Are they asset? Okay. So is there fulfilling the three definition? So every time you give example, you have to go back to the definition. Okay, this is like you just refer here and give example. Okay, the example can be as detailed as possible. Okay, the next thing to liability. Asset is liability, the opposite way. Okay, obligation of the entity, what the entity have to pay in the future, arising of the past event, the settlement. Okay, you need to settle, means you need to pay cash outflow from the entity of resources. Okay, you pay cash. So this is like a settlement. And obligation means you have the duty to settle. What are the liability? Example of obligation that you have? The first that come into your mind, liability, means you need to settle.
Payable.
Okay, account payable means you buy. Just now you sell to your customer. Now you buy from your supplier, and you have the credit term to pay them in the future. So it become your duty to settle the bill. Okay, so it become a present obligation, and then you already buy from them, you receive the goods, so it's already passed. The sales is already performed, okay, the purchase is already completed, so it's from past event. So you have to pay them maybe by cash, okay, credit card, check, transfer. So some kind of settlement is going to happen. So it fulfill the criteria. Beside account payable is a short-term one, so you call current liability. Okay, beside
Loan.
loan, okay, loan from the bank. So if you have loan from the bank, you take money from them, it become your obligation to settle in the future. So loan can be a long-term liability, it can be a short-term liability. Long-term liability means you have a longer period of settlement now. Maybe 2 years loan, 3 years loan. But short-term liability, what kind of form of loan from bank?
Credit card.
Okay, for yes, credit card is one kind of short-term. We call it like revolving credit. Have you heard of something like credit card? Okay, they provide you a account. You can take cash at once from that account. Okay, even business have this facility. Okay, revolving credit and also overdraft. You already have a saving or current account with this bank, then they allow you overdraft. You withdraw more money than you have in the bank. So this is all an example of current liability, short-term one. You need to pay back in short term. Okay, so also normally the amount is smaller than the long-term loan. Okay, so it become a liability. Any other liability? Maybe you're not so common. This kind of liability maybe not so common, but it's still considered liability. Have you heard of provision for doubtful debt?
Yes.
Okay, what is this? Provision for doubtful debt. Doubtful debt means there is very high probability that the debt will be
Received.
Are you going to receive the debt or not?
No.
No. Okay, high probability that the debt will be defaulted. Okay, you loan to somebody. Okay, but you think very high chance, but not by guessing, but with evidence that you confirm a high probability that okay you are not getting back this loan. Then you can have this provision you put in before the debt is doubtful, before, because you already have very high confidence that the customer or the debtor will not pay back you. So you can record it first because this is relevant. Okay? The amount is big. Normally, what kind of business will have this liability? Provision for doubtful debt. And it become a very important a measurement whether this company is healthy or not. Oh, which business provide loan as their main business?
Bank institution.
Yes, banking institution. So if you go and find any bank annual report, normally you will see provision for doubtful debt or bad debt, okay, as their liability, okay. And also this become like a signal to the investor or customer or anyone whether this bank is healthy or not. If you have a very big amount or very big ratio of the provision of bad debt, means you are providing loan to person that are easily default. So means your population or customer is not so healthy. If you go and compare all those banks in Malaysia, Okay. Based on your gut feeling lah, which bank will have lowest provision for bad debt? Means they are very prudent and not giving out loan easily. Based on your feeling, gut feeling, all those banks in Malaysia, Maybank, Public Bank, Hon Leong Bank, CIMB Bank, M Bank, which bank normally?
Normal public bank.
Yes. Public
alright.
bank normally have one of the low provision for this lah. Means they are very prudent lah. They're not giving out a loan easily, and they do a very tight screening of their borrower. How about which bank are more like opens to borrowers? You think?
I think, is it
Hmm?
CIMB?
Whoa, okay. Why you think it's CNB? Because you are correct.
Oh, why? Because I'm the user,
I
and always he send the what's called the promotion.
proposal ask you to borrow money.
Yeah lah.
Oh, okay, so
What he said? What service we have provide? What you can borrow? Then all go to the trust bin.
okay. So your experience tell you CIMB. Okay, actually you are correct. CIMB have more loan. They created quite a big amount of provision for bad debt lah. So they predict or they forecast that very big customer base, they have high chance of defaulting their loan. Why? What are the factors affecting this culture? You have to see at the back of the management lah. Okay, you will see how their management style. What are the person managing this company? Are you opening to risk? Okay, so CIMB is a risk taker. They are actually the beside banking business, they are involving in touch and go. Okay, the e-payment system. So they try to diversify their business. So they are taking risks. It said they encouraging more borrowing so that they can increase their market share. So CIMB are a risk taker, okay, comparing to other banks lah. Okay. So that's why they have more and they have higher provision for doubtful debt lah. Okay. Okay, next one, income. We have to finish this. Income. How do you recognize this as income? Income can be revenue or gain. So you see from the definition, revenue arises in the course of ordinary activity. Ordinary activity means you depend on this kind of activity to generate your profit. The main business you are in. Okay. Gains may be other income. Okay. You are selling fashion, but also you have building that you rent out for other tenants. So rental might be your income, but sales of fashion, okay, is your main revenue. So income can be revenue or gain. Or you have investment in other company. You also invest in share, okay, involved in trading of future contracts. So this might be also your income, but not your revenue, because you are not depending in investment activity to generate sale. This is only the supporting activity. So ordinary means your main business activity. Okay. If other than main, it becomes your other gains, other income. So you will see the subgroup of income. If the business is big, you are not only having one sources of income, you will have others. So if you can go to the Bursa and try to download one annual report and see. Normally, those companies will not only have one business, they have a lot. Okay. Okay, so this is income. Expenses arise from ordinary course of activity include sales, wages, depreciations. Means you incur those expense to generate sales. So you have to pay your worker, okay, sales and wages, the staff salary. Okay. Depreciations mean you have asset, the machine, the fixed asset. Okay, you need to consider the depreciations every year or every month. Okay, because the historical cost, when you use the machinery, the useful years will go down. Okay, there will be wear and tear. Okay, you need to maintain, so you have to consider the depreciations. So those are the expenses. Losses means if you has, for example, you sell your fixed asset. Okay, after a few years you already use, you want to sell it to the second hand, you want to buy a new asset machine, so you sell it and you incur a loss of the asset, so you will also record it in under loss. Okay, it's not a revenue based on the sales price, but you have to compare to the cost that you buy. So if under the cost means the sales price that you sell now is less than the purchase price, then you have to record the loss. Or you invest in security, share, bond, and the market price or show that the price already dropped, so you also have to recognize the loss. Okay, you will have to recognize the loss. Depletions of assets such as cash or cash equivalents like investment in security. Loss include those result from reduce in fair value of investment asset. Foreign currency is a normal one. If you involve trading with overseas country, exporting, importing, so you will use foreign currency in your business. So you also need to consider the foreign currency fluctuations. So if the currency depreciate, then maybe you will have some gain, or depreciate, you will have some loss. So you also need to consider, because every payment you are doing it with foreign currency. So this will be presented in your account. So, okay, loss or bad debt. So when you confirm that your customer already bankrupt, they won't pay you, okay, it's already incurred the loss, you record as doubtful debt or bad debt. Not provision. Provision is not yet happened, but you are very sure, very high chance, maybe 99%, but it's still not yet happened. When it happened, you will change, you will move the provision into really the real loss already. Okay, so those are the expenses or losses. Okay, okay, accounting equation, complete asset plus what equal to what?
Liability equal to it's called capital.
Anyone? The double entry equation, the main equation. Remember? Okay, think of balance sheet. What is inside balance sheet? On your left side and on your right side, always tally and balance. So what is on your left side? Yes, someone?
No, this equation is wrong.
Wrong in what way?
Asset equal to
Yes,
the other
correct
two,
the
right?
equation, please. Tell me the correct one. So this is asset equal to what? Or assets plus what?
Liability. Asset equal to liability plus the
Plus
equity.
equity.
Yes. So this equation is actually asset equal to
Liability plus
if you forget this, just imagine balance sheet. Okay. So this is the answer for your tutorial question. So you have to make sure the transaction is tally. You need to ask yourself, okay, this transaction, what are the asset or what are the liability? There must be one asset and either liability or equity involved. So each side must be always tally. Okay, this is the double entry, also the main element in your balance sheet. Okay, so every time when you have one transaction, you have to have this equation in your mind. What is in, what is out, basically. Okay, asset is what's in into your company. Okay, what is out? What are you need to settle? Okay, why equity is inside liability? Okay, equity is the model, the capital, the share, because you have the obligation to your shareholder also. Okay, you need to share your profit to them. You need to give dividend. Okay, these are all the obligation also. So they are in category of same side of liability. Okay, because you can have many form of capital. Okay, when you have cash, you bring in cash, maybe this is your own capital. So it belong to asset cash and also under equity, your own capital. Okay. When you bring in a loan as your capital to buy asset, maybe machinery, okay, a building. So you have building and machinery under asset, but you also have loan under liability. So always the two sides is tally. Okay, so answer, try to refresh the accounting transaction inside the tutorial question. Okay, so I think the time is up, but I want you to try this question, a few one first, so that you can answer the exercise, the tutorial question. So this Sadiq is a wholesale trader. Following transaction are recorded in accounting equation. How do they record? First, okay, they start the business with cash 200,000 and 500,000, land 500,000. So what are the equation? Asset, what asset you have?
The asset, we have the land and the cash.
Okay, under
So total,
yes, you have the land 50,000. You have the cash 200,000. What about the other side?
the capital 250,000.
Yes, capital is under equity. So under equity, you have your total sum 250. So this is a complete transaction. Okay, second one, bought merchandising for cash means you purchase your stock, okay, for cash 80,000. So on the asset side, you have
80,000.
this is your stock. You bring in stock to sell. So under the asset side, you have
Inventory.
yes, you have inventory. You plus 80. Okay, you record additional increase of inventory of 80,000. Okay, then
Minus cash.
what?
Minus cash 80,000.
Okay, the corresponding recording side is cash. So your cash is still under asset side, but now it become reduced 80,000. So plus 80,000 of inventory minus 80,000 of cash, so it's zero. So it's still tally. Okay. Cash sales of worth 25,000. Which side? Asset or liability or equity? Sales. Okay, do you bring in anything in? Okay, so cash is what?
Asset
Asset. So asset increase or decrease?
increase.
Increase 25,000. Okay, the corresponding?
Income increase 25,000.
You can say income increased 25,000 or sales increased 25,000. Okay, so
the what they call the income is on the capital side, the equity side.
Yes. Why income is in capital side?
The income in the equity side in the what's the called the financials statement.
Paying earning means when
Yes.
you accumulate your earnings, it will be recorded under equity. Okay, so okay with the question so far?
Yes.
So far, anyone's problems? Okay, so the tutorial question is fine. Managed to do tutorial. Okay, so any more question? I assume you can understand the transaction, the equation. Okay. So try to pick up all those foundation lah. Okay. So I see you tomorrow again. Then we will continue with the tutorial. Okay. We will discuss the question. You will present first, then any error or mistake, we will correct it during the tutorial lah. Okay, then you submit your answer after the tutorial class.
Okay.
Okay. Okay, any question or you want to ask something, you can ask in the WhatsApp group. Ajin, okay. Okay, then we will see you tomorrow. Okay.
Okay.
Okay, bye everyone.
Okay, bye. Thank you.